Good evening, everyone. Today it is 16th of May 2023, a bit late, but never late than ever. Um, if you are here and you're not a member, you cannot comment, but if you are, I will be highly appreciated if you do leave a comment. This is open for everyone who bothers to listen. But if you want to comment, you need to be a member of this YouTube channel. It's a different subscription from anything else. So if so, do so. And it'll only be available for members later on. So you have to take notes or whatever. So, first of all, First Master says that she doesn't think that they are in a spot to hold rates yet. That is definitely dollar bullish coming on from her. I would like policy rates to get a pivot where I could equally be potential increase or decrease. I don't put in terms of pause. I put in terms of hold. I don't think we are holding rates yet. Now, this is one member of the Federal Reserve, um, and it is not really surprising. She's the more hawkish ones in the Fed. So regardless, it's still her opinion. She's allowed to hold her opinion. But if you look at the opinion of the market, what's being currently being priced in is currently being priced in current rate for the meeting of June. Going over to meeting of July, the same thing is hold because it's summer. Not a lot of traders out there to keep pushing the market. But I think it gets interesting by September. The first rate cut is already priced in. Then the second rate cut is most likely by November, and the third rate cut is most likely is now priced in as most likely by December. And one, two, three, fourth one by one rate cut, two rate cut, three rate cut, four rate cuts, fourth one by January, and every meeting out, we are currently pricing, or market is currently pricing in lower and lower interest rates. So one cut by every meeting is currently priced into the market. So that's a bit of contrarily to what she is saying. She said that we need to we may not be able to pause yet. Hello, Roxana. Now, where does this come from? Where is this information from? When we go over to United States of America and you look into their inflation, what is the current inflation rate? 4.9. Is that 2.0? Is that 2.0? It is still not 2.0. Is inflation rate month over month 0.2? No, it isn't. So she has a point. Today a bit of more news came out where retail sales were less than expected. And sorry, yeah, best than expected in that one, and the other one is better than expected in the control group. That in itself should lead to lower, at least, expectation of interest rates. But if you look over the month, so this is what I do often, that you also have to do. So let's go filter, United States of America only, and then we go down to that one and that one. Zoom out a bit. So, what is currently the PMIs going around? Okay, so these ones are around 50. Okay, this one is 45. This is 47. This is 53. So manufacturing is in a contractory scenario. Same thing is new orders, meaning it's supposed to be above 50 to show that businesses in manufacturing will grow going forward. So they're not growing going forward. Specifically and particularly when it comes to services, which is above 50, not obviously, but practically. So that is the opposite here. But then we go over to Fed monetary policy statement. They kind of pivoted. They kind of paused ish. Not really, but they're open to it. That's very very important to read. That's it, which we're going to do in a couple of minutes. Jobless claims higher than expected, and then non-farm payroll comes in way higher than expected. Unemployment rate comes in lower than expected. Sorry. So we have unemployment and employment stronger than expected. We have interest rate at still on a higher side, but they were expecting it to continue falling down. What does that mean? That means that we are not there yet. So, what is the market pricing in then? The market is pricing in that we have gone from 0 to 5% in a year on something small. A year, we've gone to 5%. That is, I don't know if it's the fastest in history, but it's incredibly fast. And that will, in the future, going to have an impact. Now, important to note is that you as a trader are needed to follow what the market is going to do. What the market is currently pricing in 2 to 3 months going down the line. That's your job as a trader. If we go over to Federal Reserve, what did they say in their last monetary policy statement? They said economic activity expanded at the modest pace in the first quarter. Modest pace. That's what they want to see. Job gains have been robust in the recent months. They don't want to see that, but it's too high. Unemployment rate has remained low. All of these are positive and a bit too positive information. Inflation remains elevated, still positive and too positive information. Banking system is sound and resilient. Funny. Tighter credit condition for household and business are likely to weigh on economic activity, hiring, and inflation. What is tighter credit conditions? Interest rates, loans that the people have. The extent of these effects remains uncertain. Committee remains highly attentive to inflation risk. So, what kind of language does this sound like? Peaking language, where we still have very high inflation, not so much growth, but jobs are is doing, or the job market is doing very great. And then the rest is like what they did and blah 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 blah. In assessing the appropriate stance of monetary policy, the committee will continue to monitor implications of income information for the economic outlook. The committee will prepare to adjust the stance of monetary policies if appropriate, if risk emerges that could impede the attainment of the committee's goal. What I'm looking for? Economic outlooks. Inflation, GDP, economic activity, generally speaking, specifically speaking, what's in your economic calendar. Now, take that against Japanese yen, and Bank of Japan is going to talk about something completely different. Okay? That's just how the world is. We have weak currencies and strong currencies. We have strong economies and weak economies. And Japan is on the other side of that. Okay. So that's that. If you go back to current dollar, we have debt limit negotiations today, and rightfully so. It's been marked out in the comment section that what is going on, what will happen, what are we doing. The most important thing is that you are aware of it. The most important thing is that you come down and you think, what is the implication? I don't know the implication. I don't understand the implication. The implication of the debt ceiling, and let me explain, is that if they by 1st of June can't pay their bills, what is going to happen? People are going to go home. They are not going people or their salary is not going to come through. People are going to stay home. People are not going to go to work. People are not going to do what the government wants them to do because they're not going to be paid. The suppliers are not going to be paid. So it is a deterioration of the economic outlook short term is going to deteriorate very quickly. No, this is not going to create damage unless it goes on for weeks upon weeks upon weeks, but it has serious implications to the economy if not resolved. Now, my positive remark there is that I don't think that it's going to be. I think they're going to fix it until they do fix it. It is a dollar strength scenario. Okay. Why is the dollar strength? Because there's higher risk of a defaulting country. Secondly, in that scenario, what is the current monetary policy future expectations looking like? What did I just show you on CME? I showed you that we are going to cut interest rate for every meeting from September for this year. September, October, November, December. Was it 4? If I can remember right. How many meetings there is in a year? There you go. 1, 2, 3. Okay, 3 this year. 3 cuts this year. One ever meeting. That's why dollar is weak and continuing to weaken. Is it currently weakening? No, because the debt ceiling short-term volatility, and that day when they come to an agreement, dollar is going to fall. Dollar is going to fall so hard you don't even know what slapped you. So if you're dollar bullish, be cautious, be aware of this upcoming, maybe not today, definitely not today, but this upcoming event that once that happens, it's going to be before it hits the news and dollar is going to fall and euro's going to go higher. And you need to not stand in front of that. So if you take the profit before that, you sell it now and you buy dollar now and you hold it until that happens, highly risky. But I'm gonna allow you to do it. When it comes to euro, euro dollar should remain probably driven by dollar leg and debt ceiling saga. We see 108 as a key benchmark support, and we break below that level would probably signal a significant deterioration in the market sentiment. If you go over to this euro dollar and they said 108, what does 108 represent to us? Nothing. 108 represents to us the somewhere close to target for the month of is it 1780? Okay, it was a bit. Okay, I was a bit off that fight. Sorry. Somewhere closer to a target. But I would argue that 107, 108, 107.50 are levels we need to look forward to in terms of going higher. That is just our more longer term view trade. And so far, we can't buy euro dollar. It is. Okay. So for me, I'm totally cool with what's currently happening on euro dollar. Okay, ING, everyone should subscribe to them. Probably ing.com. Sign up, something. Sign up to this one. There is your link if you want to do that. I already have signed up, so don't worry. They are. I would like you to do the daily ones, by the way. So I have daily updates. These ones are very good at dollar weakness. Danske Bank is very good at dollar strength. So depending on that. Seasonality. When it comes to seasonality right now on dollar index, we are seeing technically bullishness. Not really fantastic, but some years we are seeing that we are seeing that we have a cliff around 29th of May, falling hard and then reversal and then going back up again. So just for you to be aware that that's what we're looking for. Dollar weakness from 29th of May, give or take somewhere around there, the last week of May. And how does that look like? 29th. Yeah, that looks like a great week to dollar weakness. If it starts happening on Friday, don't be surprised. But yeah, towards the end of that one. When it comes to euro dollar, the euro then would then do the opposite thing, which starts around 27th of May, 26th of May. Have to be prepared, maybe also 29th. Those are the 2 days of Friday and that Thursday. You really need to be aware. And if it starts rising hard on a Friday, you have to do 2 things. I would buy the current price, whatever that price is, probably high or high, and then I will buy the pullback on Monday, whatever that is. It's going to be very strong. There is all pivot points, everything is just tossed out the window. It doesn't really matter what you kind of going to do. It doesn't really matter what you think. The market is going to rise fast up to target of the week, and when that happens, you are a dead fish, and there's nothing else for you. So it's really quickly go back to previous years. How does it look like? Start testing it out. Start looking at it so that you are prepared for that scenario. I am not going to hold your hands because I'm going to trade fast and quick. And if you're like, oh, but I'm waiting for pullbacks, you need to really look at it. Global demand is set to rise by 2.2 million barrels per day to a record of 102 million barrels per day. UE agrees to toughen the rules on taxing crypto transactions. It'll probably made Bitcoin go lower, and the supply fell by 850 barrels per day, while non-OPEC plus supply will raise by 710 barrels per day from April through December. What do you think is going to happen to oil price right now? OPEC says they're going to cut production. That was gold, by the way, sorry. They're going to cut production by 850 barrels per day, while OPEC Plus will increase. Will that send oil lower or higher? Lower, because that is a higher, sorry. Small surplus, but nothing fantastic. But we're currently at 70.67, and we're currently bearish, so I guess the market is just going to continue falling then. So that's also important versus trading oil. Dollar index. Where are we right now? We are currently, or there is 21,000 contracts long. There is 10,000 contracts short. Both took profit last week, and the general direction for the dollar COT report is flattening out. Why is it flattening out? Because we have no clear direction on monetary policy, or we have less clear direction on monetary policy. We have seen less buyers in the market, but sellers on dollar hasn't really picked up. So what does that mean? That means that the market is going to go in a direction whenever it sees that we have a clear outlook, and so far it's still a bearishness. When it comes to Saxo Bank, says that U.S. equity markets remain stuck in a remarkable holding pattern that is remained in volatility for more than 6 weeks. Now, the last 5 trading days has not strayed more than a couple of percentage from the average. Incoming data could shake the market out of the range on significant surprises. but so far hasn't happened. Still waiting for the next catalyst. Australian dollar weakest as China activity did disappoint, and this is interesting. America is going to start filling its strategic petroleum reserve. Is that going to make VTI go higher or lower if they do that? Is the oil going to go higher or lower if America starts filling up their oil reserves? It's going to go higher. There's less supply of oil in the market. There's already a surplus of there's always an undercut of supply in the market. So OPEC is going to reduce 800,000. OPEC Plus is only going to increase by 700. So there's 100,000 difference there. That will one go higher. Does that change our direction for oil? Yes, slightly it does. Until we have but it will start August. Okay. So overall, we'll probably start looking for higher oil prices. Secondly, we had unemployment rate data this morning that was less than expected or worse than expected. It was 3.9 instead of 3.8. Is that going to break the bank? No, it's not going to break the bank. It's not going to break because inflation is still too high in the UK. 3.8 to 3.9 is not going. It's not going to be enough. It's going to be a divergence. It's going to be like a small little difference there, but generally no, it doesn't. China retail sales overnight were below expectation, showing an 18.4 year-over-year gain versus 21.9 expected. Is that a problem? It's a problem for Australia. It's a problem for New Zealand. Is it a problem for the world? If anything, that leads to dollar strength. If anything, that leads to Aussie weakness and New Zealand weakness. So industrial production was weak at 5.6 year-over-year instead of 10% expected. Is that a problem? China's youth unemployment levels rose to 20.4. China's working population declined by 41 million over the last 3 years due to retirement and higher employment among youth workers. Is that a problem? To an extent it is, to an extent it's not. Because the overall unemployment rate declined. So there are still jobs, just more skilled, I would assume. But the industrial production weakening, the retail sales weakening is definitely an issue. And that's going to lead to dollar strength, Aussie weakness, and Australian dollar down. What do we have ahead of us? We have a lot of speeches ahead of us. We have Logan, we have Bostic, we have Williams, we have Bowman, we have Powell. We have Jefferson. Why are they speaking now? Because they're allowed to speak now. They're able to speak now. When is the next Fed meeting? Does anybody know that? When is the next Fed meeting? What does that have to do anything? Dollar weakens, dollar strength is always two prior. So it starts the third week before the Fed meeting. With that, Fed meeting is 14th of June. So beginning of June, there's no more speeches. They have 2 weeks to speak and say their opinion. Are we going to look into that? Yes, we're going to look into that. We're going to look at what they're saying. What's the current fear and greed index? Around 50, I think it was, if I remember right. Or 658 now. Okay. Turning over to greed. Fun. If you look at S&P 500, what is currently happening today because of high lower retail sales and whatever the other thing was earlier today? Okay. That's just short-term volatility. And I said, if it comes down, we buy it. Did it happen? No, it didn't. Dollar index strengthening, comes in stronger. Okay. Okay. Euro dollar down. Australian dollar down. Okay. Yen pairs goes higher. Goes higher. Euro yen. No. Euro yen. Okay. All right. Okay. Then tomorrow. Euro New Zealand. Oh. Why are we not going higher, bro? Bought here because of the divergence in monetary in economic performance. Australian dollar falls hard. Okay, cool, fair enough. New Zealand dollar CAD comes back up again. I don't like it though, but I'll just say maybe a short here, stop loss up there. British pound, New Zealand dollar, flat. Okay, that is not great whatsoever, but I'll still buy it at 0.9950. The update is so far that we have 3 rate cuts priced in currently for this year. We have a weakening in the dollar. We have a weakening in the monetary policy. We have a strengthening because of the debt ceiling, but that's going to be resolved by 1st of June, which I expect. And again, this is not likely to kick in as dollar weakness or whatever. Those two coincide. Dollar is going to weaken. So if it strengthens now, good for me. I will just get a better price to sell the dollar from it. Good on you, mate. New Zealand weakness has not been as what I wanted it to be, but I'm still there. I'm still monitoring it. Secondly, thirdly, fourthly, fifthly, Europe may peak soon. Dollar may peak soon. Canada did peak, but with the new CPI going higher, is maybe. Bank of Japan has still not changed its ultra loose monetary policy, which weakens the yen, and all of that just makes me selling New Zealand dollar against everything else, looking to sell dollar whenever that comes out, and selling yen whenever that comes back to support in a bullish uptrend. Okay, cool. Sounds good. Bye, everyone. If you're not, boom. If you want to have trade setups, targets, there is in Discord or something like that. So, good. See ya.